Yes, we can. All right. Lesson 2-1. Accounts receivable. This is when we sell things on account. Okay, we'll go through the slides. First of all, how do we journalize sales on account?
Oh, I'm so scared. I would have told you.
Okay, guys, here's our transaction. Sold audio equipment on account to Kim Electronics. $280 plus your sales tax for a total of $303.10. Your sales invoice number is 101. Remember, accounts receivable is what? An asset, right? Yes, it's an asset. Here's how it looks.
There's a glare.
Close. Well, pay attention because we're going through it, whether you feel it or not.
Mr. Sharp, you should see.
All right, first, as usual, we write our date. There it is. Second step, write the customer name. In this case, it's Kim Electronics. You have your third step, write the sales invoice number. Okay? Step 4, write the total invoice amount, which is everything is going to be accounts receivable debit. Next, we write our sales tax payable amount. Okay? Under the sales tax payable credit, finally, you write the sales amount under sales credit. Okay? Why is sales a credit? Where is it located? It's on the right side of the equation, under owner's equity. What is going on? Posting from our sales journal to our accounts payable ledger. Yes, and I definitely slurred journal. Okay, again, you guys, this is no different than accounts payable. We're just dealing with accounts receivable. So, to post from your sales journal to your accounts receivable ledger, same steps. Write the date.
Is this the exact same stuff we've been doing except in a different journal?
Very good. Yes, it's exactly the same as accounts payable, except it's accounts receivable. So rather than like remember with account,
debit.
everything's debit.
Oh God.
Do we have to go through all the notes?
Yes. Okay, so we write the date. Your sales journal page goes in the post reference.
No.
Enter amount in debit column. There it is. Enter your account balance. If it's a debit from the top, we carry a debit balance. Accounts receivable is a debit balance because it's an asset. Okay, that's posting. It is the same as accounts receivable. Or accounts payable, sorry.
Now you have me confused. Yeah, maybe it's that marker you're smuffing.
Muffin?
Go back to lunch.
Once we post it, you take your your customer number, you bring it up to your sales journal, and that goes in that post reference number. Okay, it's no different than accounts payable, except we're working with debits now. It's the same thing.
What's that attitude everything poster?
It's for magazine sales. Okay, posting from a sales journal to a general ledger account. Okay, first first thing we do, write the date. It's the 30th. Remember, we will have totaled everything up, and they all go underneath their own little account, the totals. Okay? Write the sales journal page right here, S6. We get it from right there, the page number on your sales journal. Step 4, enter your debit amount, okay? We're dealing with accounts receivable first. It's $19,836.50. We bring that total down. Once we bring the total down, your fourth step is always enter your account balance. So, since it's a debit here and we carry a debit balance, we add the $19,000 to the current balance in there, which is $18,000. It gives us a total of $38,018.70. When we go back up to the top with your totals, remember, you grab your general ledger account number, write it underneath the total in parentheses. This should be review, same thing we just got done in chapter 1. Okay, just like with accounts payable, you guys, we will have sales returns and allowances. Okay, people will return product that we sold to them. So we need to recognize it. For example, on June 5th, we granted credit to Kim Electronics for audio equipment, returned $130 plus your 1073 sales tax from our invoice 101. Your total is $143.73. Now, last chapter it was a debit memorandum. This chapter, since it will be a credit, it's a credit memorandum. Again, here's how it looks. Now, since we have sales tax, rather than 2 lines, we're going to have 3 lines here. Okay, so here's how we do it. Step 1, write the date. Step 2, enter the accounts to be debited. We are going to debit our sales tax payable. We are going to debit our sales returns and allowances for the specific one, audio. Okay? Record credit memo number. CM43, we get it from right there, it tells us. Write our debit amounts. Okay? Our sales tax payable is $1073. Your sales returns and allowances for audio is $130. Next, we're going to enter our account that's going to be credited. When we are getting returns, okay, after we sold, what do we need to do to our accounts receivable? If they're sending it back to us. What do what's that?
Debit?
Not a debit. Think about if someone's returned, we sell something, they don't want $130 worth of that, and they send it back to us, what does that do to our accounts receivable?
Makes it go up.
If they're sending it back,
Yeah, you get the money back.
it goes down. Remember, accounts receivable, we're selling. Okay, so if they send it back to us, that means that our accounts receivable goes down because they're not going to pay us for product that they sent back. Okay, accounts receivable, rather than with accounts payable, we had some point we're going to pay for it. Accounts receivable, at some point they're going to pay us. So if they send it back, we need to decrease our accounts receivable. Since we know accounts receivable is an asset, we know we decrease it with a credit. That's why it will be a credit amount of the total of 140.73. Your next step, again, we have our diagonal line. Okay, step 7, we write the credit amount. This is our total amount. So you will be adding 1073 to the 130 to get your total of 140.73. Oh,
Becky, did you see too?
I don't know. I just know I got a cold. Okay. Now, we are going to post from our general journal. Okay? Here's our general journal. Oh, we have basically 4 accounts. It's a 3-liner, but we have 4 accounts that are going to be affected. First account, your sales tax payable. So, we're going to take our amount, our sales tax payable amount. Where do you think it should go?
I can't read a lot of them things.
It's going to go right into its own little account. We have a sales tax payable account. Okay? So you're going to grab your 1073 debit. You're going to bring it down into sales tax payable. It's going to be a 1073 debit. Since it carries a credit balance, you're going to subtract the 1073 to get your new account balance. Okay? Next, we have our sales returns and allowances audio. Just like with accounts payable, it has its own account. So we're going to take that debit amount, bring it down, post it, change our balance. We have our accounts receivable, and then we have accounts receivable for Kim Electronics. So we have the total here, this 140.73 is going to be, you bring that total right there, Kim Electronics, and we put it individually as a credit in our overall accounts receivable, our main accounts receivable. Then you come down, right, Kim Electronics as well. Remember, that's what that slash means. Just like with accounts payable, your main accounts receivable and then your individual account, both are affected. You bring the 140.73 down to Kim Electronics. After each one, what should we do for the post reference, right? You bring it up here, put it in there so you know that you posted it down in its general ledger account, where it goes. That's why you do it. If you don't bring that up, that's where you can get confused. And you just take it one line at a time. So, you bring your sales tax payable down to sales tax payable. Enter the amounts. Once you're done, you bring the account number up, put it in the post reference number. That means you have posted that transaction, you're done with it. Do the same thing for sales returns and allowances. Same thing for accounts receivable. Same thing for Kim Electronics. Alright? They do that for a reason, so we don't get messed up and forget things.